multiplied by
12,
12.
so the
Yes.
number of months in a
Yeah,
year,
number of months.
and
And
then
then multiply by 11.
Now, why 11?
Hello, welcome back to B3 Inspire. I'm Betty Johnson, and today our topic is insurance. Why is it essential, and how can you choose wisely? If you've ever wondered whether you really need insurance or how to pick the right policy, you are in the right place. I'm joined by our resident expert, Edem, who is here to demystify all things insurance. Welcome back, Edem.
Thank you. Always a pleasure to be here. And insurance can be a lifesaver. It's one of the most fundamental and pivotal aspects of financial planning when we're doing any kind of planning for clients. And I think it's one that it's so important that we should try not to do away. We should try not to do away with it, even though sometimes people tend to. But today we're going to sort of break it down and to ensure that we understand it and really get into the nitty-gritty of why insurance is important, or in its simplest form.
Amazing. So we will be discussing why insurance and share with you essential tips of which policy should choose. Stay with us. Let's jump right into it. Right, to start, Edem, let's start with the basics. So, why does insurance matter? And why should someone pay for something or pay for a premium of something that they hope never happens?
Good question. In fact, it's a great question, really. And let's look at it in a different light. So, think about it this way: there is no amount of life insurance payout that can be compared with the peace of mind that comes with you not having a liability in your state, or the peace of mind that comes with you living a long fulfilled life. There is no amount of life insurance premium payout that can be compared with you knowing that, I mean, at the end of the day, you don't have any sort of loans that you have to worry about at any point in time. I mean, the point is that the core of life insurance is that it protects your wealth and then also protects your well-being. Okay, think about it this way: a life insurance is a financial instrument. And I say it's an instrument because of how it's being structured. And we'll go a bit more deeper into it. Because if you have a huge expense to pay, right? And you realize that, okay, why should I pay that huge expense, especially when you don't have the means to pay it?
Working in your field, you surely would have some real life stories of how beneficial this is. Is there one you could share with us?
Yeah, I got this immediately. It's a client, right? Took out a life policy with critical illness. Yeah. Like when I say life policy, I mean life insurance policy. The life insurance policy, you can have it with or without critical insurance. Okay. Critical insurance is insurance policy if you do have any sort of serious illness. Okay. This could be cancer, it could be stroke, it could be sort of heart issues. So the client took out the life insurance with critical illness, right? So I mean, yeah, healthy, as fit as a fiddle, and then out of the blue, unexpected, went to do normal checkup, and then lo and behold, there was cancer discovered. Okay. And so the doctor said, and this became terminal. I mean, the doctor says that he is terminal, and so he's only got. And anytime there's a terminal sort of report that comes from the GP or the doctor, they give you the time. And when it becomes terminal, as part of the policy, it means that immediately you can claim. Okay. So the report was given. Okay, fine. So okay, see, he said that I don't. And interestingly, he said to me when we were having the conversation, he said, Adam, I don't believe it's my time for me to die yet.
I love that faith.
He put it that way. I don't believe it's my time for me to die yet. I've got children, I've got grandchildren that really wants me to be around for longer. So and what all I could just say is that I believe that it's not time for you to also to go yet, and I agree with you. Okay, so we just have to find a way to empathize and try to encourage and also to inspire. So yeah, throughout the whole journey, so went out for checkups here and there. Doctor says that, oh, you've only got 12 months, as they said, and 12 months to live, cancer. So okay, yeah, okay, fine. Let's do what we can now. Go for it. And so he did everything that he could, go through the procedures and also so that he could. And then the 12 months turns to 24 months. 24 months turns to 36 months.
Wow.
36 months turn to 5 years. 5 years turn to 7 years.
Wow.
And on and on. And up to now, he's still alive. So now it goes, I mean, it was just a remarkable story that anytime I think about him, right, I said, you are a miracle.
Wow.
That's why you were a miracle. But mind you, so this is what happened. And the whole, whilst we're talking about life insurance and life policies, that he had a policy,
okay,
critical illness policy attached to it. So because cancer was diagnosed and the report was given for 12 months, he could claim. So he did claim. All right. He claimed, and it was close to about 500,000. Okay.
Wow.
So he claimed, and so because it was evident that the providers showed the report, so they paid out 12 months, then to now he's still alive, and so
the money helped. Knowing that money is even there, is it a case of reaching out to more medical expertise because you've got the resource? I mean, who knows?
It wasn't even that. He beat cancer. So
he beat cancer.
And his hard dream, he always, and then part of the plan that we did, he always wanted to have a property portfolio that he could pass on to the grandchildren. So guess what he did? Yes,
started
investing in property portfolio.
Wow.
And what was closer to about 500,000. Now his estate is worth millions because of the payout that he paid out, and then the portfolio that he set all up. So it goes to show that, I mean, this is more of sort of the positive side of what can happen, or sort of the good side of what can happen. I mean, the worst could have happened, but even if the worst happened, he had the policy in place which could basically take off his family, take off his grandchildren. Even if he couldn't have that property portfolio that you could have built and has going to pass on to children, that money, I mean, being part of the family and being able to help the family to plan and all of that money, and with the children, they could basically set that property portfolio even in his absence. But now he himself as alive. And he's seen the outcome, and he's seen the
fruit of that investment.
Fruit of that investment, and his heart desire really coming to life. So, I mean, I gave this scenario just to see the what ifs. I mean, there's a positive side of the what if, but the opposite side could also be true. But again,
and that's still positive, isn't it? Let's say in the worst scenario, unfortunately, he passed.
Yeah.
There is still a case of him leaving something for the people that he truly loves. So whichever way, it's a win-win. I mean, I love the fact that he recovered and he's well. It's what we wish for everyone.
Yeah.
But he still benefited.
Absolutely.
And if the worst had happened, his family will still benefit. So in whichever scenario, it is a win-win.
Absolutely. I mean, you cannot. I mean, they say that, okay, life insurance policy has got what we call no cash value attached to it, which means that if, for example, nothing happens to you, you are not able to sort of make a claim. Yeah, fair enough. But again, it's not really about that. No. It's about the knowing that, I mean, let's just get it, forget about the what ifs. And if the what if happens, we know that we covered.
Just peace of mind.
Absolutely. I think probably be hearing that phrase a bit more in the scenario. But yeah, you can't really go wrong with it, especially when you have the right policy in place to make sure that the things that are dear to your heart are being protected. Your loved ones are covered. Yeah. Dependents, you're not going to leave any liability for them. They don't have to worry about the financial pressures that will come with it. Any eventuality that may happen, I mean, you covered. So I cannot overemphasize the importance of having a life. And as I mentioned earlier on, if I want to do any kind of planning, in fact, we always ensure that we do have the foundation of life insurance to start with before we go to investment, go to pension, we go to any kind of estate plan. Life,
the foundation.
Even though life insurance protection, we call it protection,
That's right.
is the foundation of every planning that we do for clients, right? Think about it. You are the cash machine of your life. Yeah, you are the cash machine of your life.
Cash machine
And
of
then
your life.
if the cash machine is no longer around, I mean,
Then what happens? Everything stops.
Everything stops. Yeah. So, but then if you do have the right policy, I mean, we're going to talk about health insurance, and also sort of the critical illness and the income protection. But if these things happen and you've got these policy, it does go a long way to ensure you mentioned about having sort of the right sort of care in place. Yes. When you do have the payout, especially for critical or serious illness cover, or even there is sort of the income protection sort of payout that comes in, it does ensure that you have the quality treatment to help you to recover. And it could be a difference between recovering and not recovering. The quality of care that comes with you having the lump sum that you pay out, or the lump sum that pays to you, that becomes available for you to pay for the quality healthcare
that you need. Amazing. Right. So, Edem, what about life insurance? Because that one especially, people tend to put that off, and I think I can understand why people put that off. Nobody wants to die, isn't it? What about that?
Life insurance is important, is significantly crucial, because what life insurance does is that let me put it this way. It's important, especially if you have a dependent, number one. But then also if you do have some form of liability that you have to take care of. But again, not even that. Even if you want to, for example, some of the plannings that we've done, clients who may not have any sort of tangible assets to pass on onto their next generation or to their beneficiaries, they tend to put in place a form of life policy that serves as an inheritance plan for their children or for their beneficiaries.
When you a form of inheritance, what do you actually mean? What is that?
So for when you're no longer around, when you do die, I mean, some people, the thought of not leaving anything behind for their loved ones is just something they can't bear. It's some form of asset. And so a life insurance or type of life policy, there's a type of life policy whereby you can take it for as long as possible. And so it doesn't matter when death occurs. It means that when you pass away, some form of money or funds can be passed on onto, if you have children, can be passed on to children, or maybe to an organization or a charity of your wish. So that is how that tends to happen.
So it's not just a case of, you take life insurance and then you die and maybe it pays for your funeral, but actually there's some amount of money that is paid to people that you put down as beneficiaries.
Absolutely. So it goes, having a life policy can go beyond sort of having to pay for a funeral expenses. But it can go beyond that. So life insurance is so much important. So not just for paying for liability, or if you have a dependent, if you do have a mortgage, it can go a long way to ensure that if you do pass away, or if you do pass away during the term of the mortgage, and there is a policy in place to pay for the mortgage, so that the asset or the house can stay in the estate. Or if you do have children, it can be passed on to the children. Again, there has to be planning around it in the most tax efficient way. But the other aspect of a life insurance is that it's not always a lump sum. There's a type of life insurance policy whereby, God forbid, if you do pass away, it can pay out an income to your children or to your beneficiary. Okay, so that is also, there's a different kind of policy or different kind of life policy that can help to be able to ensure that your dependents that you leave behind can have a regular income every single month, until maybe they turn 40 or until they turn 50 or until whenever. So there's different aspects of it, and that's the reason why we're doing this today. Some of this knowledge might not be fully out there, but we're doing this so that you have the knowledge to be able to take the right steps to secure what is important for you.
I mean, that's incredible, because if you're thinking, if you've got younger children, that you're probably worried that you are the main breadwinner, or both you and your partner, say God forbid something happens to both of you, who is going to look after those children? Having such a policy in place straight away stops that worry.
Absolutely, it does stop that way. And what is interesting is that a survey was carried out, and in a survey, 60% of the people that basically took the survey about asking about having life insurance policy, the 60% of the people, out of the 60%, only 35%.
I can guess this.
Go for it. Go for it.
Only have life insurance.
Exactly. Out of the 60% of the people, that agreed on the life insurance, basically says that I believe that life insurance is important and it's something to have, but only 35% of them had the policy. And the whole reasoning behind the rest that they didn't have it because they thought it was expensive. Meanwhile, if life insurance, when you and I really put out a challenge to you, go out there right now. As we go along, we sort of be giving you where to look for. When you go out there right now to look for a life insurance policy, it is not as expensive as you think that it is. Really, for £5 a month, you could be covered for something that could cost you $500,000 or $250,000.
Or cost your family. Death is inevitable. It's going to happen. So why don't we just plan? It's one thing that we know is certain in life, that one day we're all going to go. So why don't we then put structures in place to protect our loved ones?
And that took out the policy. Whereas 60% of the population thought that life insurance is really good.
It's good.
It's beneficial for me. But the core of the population that did not take it out was due to lack of knowledge. Simply, that was just the fundamental reason.
So the 40% out of the 40% who did not think that it's a necessity was lack of knowledge.
Absolutely.
And then the 25% who didn't take it thought it was expensive.
Exactly.
Wow. Again, both sides is lack of knowledge. Well, stay tuned with us. Edem is going to share even more interesting insight into this on how we can choose wisely at an affordable prices.
Absolutely. Whoa.
That's an interesting question, isn't it?
Yeah.
Okay, let's look at it.
I'm sorry. Let's do this. Okay.
Yeah. I want to remind you, if you have found this video really useful, I want to remind you to like it, share it with someone who might need to hear this, and don't forget to subscribe so you do not miss any videos. Now, Edem, let's break down the major types of insurance and share some tips on how to probably choose them. You ready?
Yes, I am.
Okay.
So in the UK, there's various sort of about five, which sort of quite sort of major in the UK, and the chief of it is car insurance.
Not life insurance, but car insurance.
Not life insurance, but car insurance.
That's hilarious.
So car insurance is the most popular or the most sort of purchased insurance.
Because you don't have a choice.
You don't have a choice. Absolutely. The most purchased insurance.
The UK government should make life insurance compulsory then.
Yeah, so the most purchased insurance in the UK, and obviously, yeah, as it is, because you have to, once you're a driver on the road, you have to have a life insurance, and so that's why it is.
What about America?
America is different. In America, it's healthcare insurance.
Because they don't have NHS.
They don't have NHS, exactly. But yeah, I'll go to NHS. Okay. Yeah, it's another topic for another day. So car insurance. So car insurance, what it is that it does protect you in case of any accident, in case of any damages, in case of any repairs that needs to be done. It's really protect yourself, but also to protect the other individual who might be the passengers as well. And in case you are involved in any kind of incident or accident, whoever you're involved with can also make a claim on your insurance. Yeah, exactly. But here it always comes with a discussion. In case there's another party involved, you can actually settle it either on the insurance or off the insurance. It's completely permissible. Okay, it's entirely up to how you negotiate. If you do have the funding involved to be able to make sure that the other person who's involved in the accident or incident to pay for their cost of repair or cost of replacing, by all means do that. It means that you don't have to go for
it lowers your premium.
That's lower your premium. It means that your no claim discount is protected. So it can happen that way, but most people don't have that amount of money available. So then they'll have to recourse to the insurance, the car insurance, to ensure that if anything happens, they can claim for the insurance. And then it means that the next time that you take out your insurance, the premium will go up. Okay. So when you do go for life insurance, there's there's a comprehensive, which is mostly what people go for, or they go for fire theft. As aspect of it as well. So the comprehensive basically means that in case of any sort of incident or accident, or in case of anything happens to your car, it means that you do have the full coverage of insurance available to yourself. Okay, and this could be anything from, for example, if your car is stolen, if there's a fire involved in the car, or if there's any sort of repair or maintenance that is needed on there, it means that you can claim for it. And if you do claim for it, there are extra features that can come with it. And for example, there's a legal cover that you can actually add as an add-on onto the policy. And you could also be claimed. Sometimes it even comes with key replacement cover. Or windscreen cover, courtesy car can come with it as well. So these are other extra bits that you can put on it. But if you do put these extra bits onto the insurance, mind you, it means that the premium can actually go up. And when you do go for the car insurance as well, you also have to just make sure that you choose the kind of what we call excess. The excess amount is the amount that the value of that you pay in order to basically make a claim. The reason why insurance put the excess in place is to avoid unnecessary claims. Oh. Yeah, that's a catch. So, it's a way of protecting their interest.
So is it easier for you to just go and pay for £100 key or than to pay for £250 excess?
Exactly.
Makes sense.
But if you do have to claim for it, I mean,
if it's higher than the excess, then of course.
And the kind of excess that you choose as well will determine what sort of premiums that you pay. And again, when you do go through the process of picking up your your car insurance, make sure that you do go change the various or choose the various options for the excess, so that you get to know exactly what the premiums will be, and so that you can make an informed decision. Don't just go for £250 excess or £100 excess because maybe it's cheaper or whatever. Just make sure, again, don't do that to save money. Make sure you're doing it because it's right for you for your scenario. And the other thing as well I want to put out there is that make sure that when you for a car insurance, every single year, it's a tip there, every single year, make sure that you do renew it. You do go for a comparison, or you go to the comparison website.
Go compare.
Go compare. Go to the broker to make sure that they're actually reviewing it, to make sure that you are paying the best cheapest. Remember, I said the best, cheapest insurance. Sometimes the cheapest that don't means that is best, but most of the time, best and cheap you can have both at the same time.
That's right.
Very important. So every year, make sure that you're reviewing it. You're going for a quote. Don't stay with the same provider, because at the end of the year, they'll come back. They'll increase it and come and say, "Oh, your insurance is due for renewal. Your car insurance is due for renewal, and this is the premium that you are due." Please, you don't go with that necessarily. Go to the market to compare the market.com or to the broker. Do the research. For every single year I've done this every year. Every single year when I do the research, I will end up having to move or change my insurance because I find something cheaper. Very important. And oftentimes as well, when you do go for the insurance, car insurance, if you can pay for it upfront than do the direct debit, because again it's cheaper.
Money.
You save money. Let's use that word. You save money in the long run. If you do have the financial capacity, please pay for it upfront rather than pay for it monthly, because you save money that way. Where do you find this car insurance? Compare the market.com. I've been saying it. The comparison website, generally comparison website, will, when you put your details up there, they will ensure that you do have the right type of policy at the best price for yourself. So that's the first one in the UK.
It's car insurance.
The second one, the most popular,
life insurance. I think that should be first, but hey, I'll save the argument for another time.
Yeah, so life insurance, I think we've been talking about it quite a bit now since we started. And life insurance pretty much covers you, pays a lump sum or a monthly sum to cover your loved ones, or to cover your dependents, or to cover for your mortgage if you got a liability, or even to pay for a huge expense. Sometimes you can use to pay for your tax liability, or even sometimes to use it as an inheritance policy. So that's what life insurance really is for. And again, it's not expensive as you think that it is. If you don't know, there's various products out there, but each product comes with different features. Make sure you understand exactly what the features are for. If you're not sure what they are for, again, seek the advice of a financial advisor like myself, or a protection advisor, a specialist who can basically break it down and explain to you exactly what those are for, and before you do pay out for.
I've got a question. What's the difference between time life and whole life cover?
So there's what we call level term. It's level term assurance, or we call it whole of life. Level term basically means that there is an age restriction or time restriction attached to it. That basically means that if you take out, for example, the life insurance, and then we call the level term assurance or level term insurance. In fact, let me use the word insurance, level term insurance, because again, they don't do assurance anymore. Level term insurance basically means that when you take out the life insurance, you choose the age for which you want the policy to end upfront. So at the point of applying for the policy, you choose that, okay, I'm at the age of maybe 30 years old, but I want this policy for up to the age of 90. Okay. And nowadays in the UK, 90 years mostly is for level term assurance. That is sort of the longest most policies go out for. So, and then we got whole of life on the other side, whereby it has got no age restriction attached to it at all. Again, so for almost like indefinite, really, for whenever death happens, it means that it will pay out. Best to take it out whilst you're young rather than when you're older, because again, it can be pricey. Okay, so that's the difference between life or level term insurance, life insurance, and whole of life life insurance. Okay, and with their life insurance as well, one of the things that, so again, you can actually source it whether through a broker or a financial advisor, or again, you can compare the market. There are certain policies that when you go out into the market or by yourself, it's not available, because it's what we call advice policies, like relevant life insurance or business policies. Those ones are not available. So those ones you will need the help of a financial advisor or protection advisor in order to help you to be able to secure it. So if you go out there and don't find it, that's the reason why. And then with the life insurance as well, and one of the ways, sometimes some people ask me, say, how do I know what amount to go for?
That's a very good question.
Do I go for 100,000?
Yes.
Do I go for 200,000 or half a million or £1,000,000? So how you really determine, especially, I mean, let me use a scenario. For example, if you do have a dependent, right? If you do have two dependents and one is, let's say, the age of maybe one is 10 years old and the other one is maybe 21, okay, but both dependent on you financially, right? If you go now for life insurance, how you tend to want to know the kind of amount to put in place without necessarily paying for too much or what you don't need, is that you take out you look at what your monthly expenditure is, right? Look at what your monthly expenditure is, multiply that by 12, and multiply that by, again, let me multiply that by 11. Okay, there's a reason why I use the word 11. Now, notice,
I'm trying to work out why 11.
Notice
okay,
that.
So let's go over this again.
Yeah.
So you take your expenditure,
your monthly expenditure,
yeah,
the value of monthly expenditure,
yeah, you multiply it by 12.
So
yes,
the number of months in a
year, number of months, and then multiply by 11.
Now, why 11? 11 because your youngest dependent is 10 years old, right?
Okay.
Normally in the UK, they say the age whereby dependents become independent is at the age of 21.
Oh.
Right. So at the age of 21. So at the age of 21, most people tend to be independent, so they can leave home or whatever, but it's not normally the case. But anyway, it's a different debate to have altogether. So at the age of, for the purpose of having some sort of framework of guideline,
yes,
you use as up to the age of 21. So because your youngest is 10,
so you need 11 years.
11 years.
So if your youngest was like 7,
exactly,
then of course you're going to need how many years? 14.
Exactly.
Yes. Okay.
Yeah. So multiply that by
12, and then by 14.
Exactly.
Oh, I like that.
To make sure that you've got the right amount of cover because it means that if, for example, anything happened to you within the year whereby your youngest is
still
financially
not independent,
exactly,
then
it means that they're covered. I mean, because the one who is 21 will some way will fall out within that. So that dependent sort of time zone, or the youngest dependent time period.
That's really insightful.
So yeah, so that basically will give you the right kind of coverage without you paying for extra unnecessarily.
Yes.
But again, if you do want to pay for more, you are more than welcome to pay for more to make sure that you ensure that you cover for more. So that's how you can work it out in the simplest form. Okay, so to work it out. So that is pretty much life insurance.
Yes.
And to go for it. Then the after the life insurance, there's home insurance.
Home insurance
yes. In the UK, which is also quite
necessity.
A necessity.
And that's also compulsory, isn't it? Because especially if you've got mortgage, you've got to take home insurance. If not, your lenders will not allow that.
Well, so there is again.
Not the case.
Is that myth? The narrative out there is that it's a must, but really, it's not a must.
Wow, that's interesting.
It is highly intensely advised in such a way that it become almost like a must. Because the reason why is that at the point of exchange of a property,
yes,
the liability of that property becomes your liability. So it becomes grossly advised that you have a mortgage insurance in place or life insurance in place, because at that point, if, for example, God forbid, if there's a fire or anything like that, it means that you'll be responsible.
That's right. You've got to pay the lenders.
Absolutely, you've got to pay for the house. So if there's nothing in place, then what's going to happen? So that's the reason why it becomes so. But really, it's not in law. Okay. That you must, like life insurance, like car insurance. Yeah. So it because sometimes something becomes almost like a culture accepted in such a way that it becomes part of the fabric. But meanwhile, it's not in law. They cannot take it to court for that. So some of these things become life. So that's the reason why we're doing this series, so that you aware. But please let it become law for you. for the reasons that we just shared.
You don't want the lenders on your back.
Let it become law for you, all right?
Also, you're losing your equity as well in the building.
Exactly. So because sometimes some properties, the moment you buy the house and you do some works immediately to it, or sometimes you do, for example, you apply for the leasehold, you increase the leasehold, it goes up immediately
in value.
Yeah. So what I mean, and all you
protect your money.
It's just about £20.
Yes.
Per month. Okay, so home insurance is also the third most purchased or most important.
So there's two types there, isn't it? There's the building insurance, then there's contents.
Exactly. Yeah. So the buildings insurance is what you must have, not the content. You must grossly advise that you put into place at the point of exchange. So buildings insurance basically covers you, for example, the cost of building the property. It only covers the fabric of the building.
Yes.
Right? That's what, and sometimes some of the building insurance also covers some of the fittings and also the fixtures, and depending on what it is inside the property as well. So these things are very important when you do go for buildings insurance. Again, it comes with certain features, extra features as well. Again, things like legal cover, things like the key replacement, things like heating and hot water repair. It comes with it. If you do want it, you can buy. If you don't want it, please, you don't have to take it. And whilst you're on buildings insurance, let me say that if you are a landlord, an investor, buy to the landlord, please. It's very important. Know this. It's not the normal buildings insurance that you go for. It doesn't cut it. It doesn't cover you. You go for what we call a landlord insurance. Yes. Completely two different insurance altogether. Landlord insurance has different features compared to normal buildings insurance for those who are into buy-to-let. All right. So so there's a building insurance, and there's what we call the content insurance, which you just mentioned. The content insurance covers you for the things that the valuable things inside the property. And mind you, content insurance doesn't cover everything, but when you go in for the insurance, you have to make sure that you are taking or going for the features that you want. So some of it may cover things like, okay, for example, it covers your valuable, like the jewelry, will cover maybe the TV, it covers and things like maybe the fridge, but some of it don't have features like covering, for example, your laptop or your mobile phone. It may be an add-on. So if it's important for you, make sure that whilst you're going for the content insurance, you are actually adding that on there. And not all providers also does it as well. So again, go for providers that will help you to be able to cover or give you exactly what you want. And then for buildings and content insurance, again, comparison website are a great place to go, and then basically go get that type of insurance.
Fantastic. So we've spoken about car insurance in the UK.
Yeah.
We've spoken about life insurance.
Correct.
We've spoken about building.
That's right.
Insurance.
That's right. Then the fourth one,
go for it.
Interestingly, is what we call travel insurance.
Travel insurance. That's right.
In the UK. Oh, the Brits, we love a holiday, don't we?
Oh, yes.
So, that's
that's the bit.
So, travel insurance, also very important. Travel insurance covers you in case anything happens whilst you are away on your holiday. Yes. The chief of it is medical. It's so expensive when you travel and you don't have anything happens to you medically. For example, you break a leg, or forbid, or there's any kind of illness that take you to the hospital. You have to, if you don't have an insurance, it will cost you. If you don't have the financial capacity, it becomes something altogether. So you probably have to find money from somewhere to pay for it. Some of it can go into the millions. All right. Yeah. And some of these insurance are not expensive. Travel insurance are not that expensive. If you are a frequent insurer, a frequent traveler, I would recommend having an annual travel insurance. So you can have what we call a single trip insurance, or we can have the annual travel insurance. Some of these insurance, you can have it through your bank as part of your bank account feature or package. But please do make sure you do sort of do your check it as well.
What
make sure
it covers because
you.
most of the time it covers the basics.
Exactly.
Yeah.
And also sometimes it'd be expensive compared to if you do sort of a standalone travel insurance. And the travel insurance as well. But some of the things that you've got to realize when you go for travel insurance, please make sure that you are there's an aspect of, for example, if there's cancellation for the trip, flights, for example, if the baggage is lost or all those things. Some of them is a bit of an add-on that you have to add on to it. It doesn't come naturally as part of the package. So again, make sure that if the provider doesn't provide it upfront, you do add it to make sure that it's something that you need. Some of also the gadget insurance doesn't come with the gadget insurance. You have to add it onto the policy to make sure it covers you. Again, go for the comprehensive cover if it's available, and some of them provide a comprehensive cover. And again, it's not expensive at all. Depending on it, the premium is dependent on where you are traveling to, how long you are traveling for.
Yes.
To put in place. But meanwhile, if you do sort of the annual cover, it's all inclusive. So it doesn't matter if you're traveling for 100 days or travel 36 days, or if you travel for to far places like Asia, or traveling to next door to France. Annual insurance just covers you all comprehensively, and it's really good for the frequent travelers.
About income protection insurance.
Amazingly, that's the next one.
Oh, the next one, go for it.
That is the next one on the list in the UK. So and sometimes you think about income protection. Well, I thought my income is important for me, without because any income, and I mentioned earlier on that you are the cash machine of your life. So if the cash machine is no longer working, and for example is sick, the cash machine is sick or has got an injury or an accident, it means that you can't draw money. So I would think that people will be one of the most purchased, one of prioritize, similar to the life insurance.
Yes.
But it's not the most purchased insurance in the UK, fortunately. But it should be. It should be one that you should really consider. Fair enough, you got sort of sickness cover at work, but really it has limitations.
Timeline on it.
Exactly, depending on where you work, and also depending on some of the statutory sick pay. It may not even cover all your bills.
Yeah.
Okay. So income protection do cover you in case of any accident, sickness, or any illness. Okay. Gone are the days whereby there was a variation. So in fact, now there are some providers that will actually will cover you for income in case of any involuntary redundancy. So there's a cover for it as well. So it does also have that in place. Again, it is dependent on how much you want cover for. Normally, it will cover you up to 60 to 65% of your annual salary. Okay. It doesn't cover the whole lot. There's some providers that will cover a bit more than just the standard. So again, when you do your research through a financial advisor like myself or a protection advisor, it can help you to ensure that you get the right policy in place. There's other features that also determine the premiums, things like what we call the deferment period. It means that, for example, if you want to make a claim, would you want to wait for a month or claim? Would you want to wait for 3 months, or you want to wait for 6 months before you actually start to make a claim? Or depends. So the longer the deferment period is, the cheaper it is. Okay. Again, it's all dependent on if you have an emergency fund in place. If you do have emergency fund in place,
we keep going back to it. Emergency fund. If you do
have the emergency fund in place, it means that you cover quite. You mean that you can have. The premiums will be cheaper because the deferment period you would have basically deferred when you want to make a claim, and then utilize your emergency fund. And then basically the insurance kick in later, and so that's what it's for. Again, lastly about the income protection. When you take out the income protection, make sure that you go for the guaranteed sort of premium, and the other features that come today means that
what's the guaranteed? What do you mean by guaranteed?
The guaranteed premium basically means that the premiums doesn't really change, or in terms of the variables that goes into the premium, it means that it stays on the same way. There's a difference between index linked policy and then also the fact that it's guaranteed. Index linked basically means that over time, as inflation changes and inflation increases, the premium will change and along
to
reflect inflation. It means that your benefit will also will change, will increase as well. But as the benefit increases, the premium will change. It's all in line with inflation.
Okay,
very important. These are things to bear in mind. And then we also have what we call the health insurance or private health care insurance. Again, I mean, because of the NHS, that's the reason why maybe the last one kind of them. So that the other insurance out there in the UK, the pet insurance or everything that comes with them. But with the private healthcare insurance, it's not grossly purchased or sought after because of the NHS. But the story, the narrative is changing a bit with sort of waiting list, sort of prolonging. So people are at the moment becoming more aware, looking into it, making inquiries about having a private policy in place. It means that if anything happens to you, instead of waiting for 5 years or 3 years, it means it can come down for you quickly and privately. It can cover your medication. It can cover how long you stay in the hospital.
There are even so we've looked at the types of insurance. So for the UK, we've discussed that we have the car insurance on the top, and then it's the life insurance, and then it's building and content insurance, and then we've got the travel insurance. We've got the healthcare, and income protection.
That's right.
And there's also pet insurance. Absolutely. If you've got those lovely animals at home. So Edem, we talked a lot about getting insurance. Now let's zoom in really out and find out how insurance fits into the bigger financial plan. When should someone review and adjust their insurance or policy? And how do they balance that with payment of their bills, but also their investment?
Yeah, it's another great question, really, because the whole point of why we're doing this series is to ensure that we cover the various aspects of personal finance. Why we call it mastering your finance. So insurance, I call it protection.
It's wealth protection.
It's just one of the key pillars when it comes to financial planning. And I mentioned earlier on that for any planning that we do, especially when it comes to bespoke plan or any sort of financial review, we always start with protection. And I keep saying that you are the cash machine of your life. So it's important that we protect you. It's important that you and your estate is protected. That's the reason why insurance or protection is so fundamental, because if it's not there and what if scenario or eventuality happens, it means that all the goals, the dreams, the aspirations, the things that you built can go in a second.
Ouch.
In a second. So it's so much important. Talking about budgeting. So we're talking about the main features of the personal finance, the budgeting, the savings, the investment, the debt management. Think about it. I mean, when you look at budgeting, you have to find a way to budget so that you, as much as you're covering your emergency fund, what if happens, the emergency fund is no longer there. The income protection is there. I mean, we're talking about savings. I mean, which the savings, the emergency fund is not there, and anything happens, there is some protection, income protection. Thinking about debt management. I mean, there are some sort of protection out there that can actually protect your debt. And we're talking about chief of it, whether it be your personal loan or even your mortgage.
Yes, mortgage.
Exactly.
Yes,
which is
mortgage.
One of the biggest debt.
Yes.
I mean, there is protection. I mean, I'm not even talking about the mortgage. I'm talking about even sort of the secure and secure lendings. There's protection out there. So it goes out to say how it weaves into the fabric of all of the major pillars of personal finance. But here's the thing. Absolutely. So when to review your
when do you review and when do you adjust it?
Yeah, I mean, I'll say annually.
Yeah.
Annually review it. I mean, in a year, so much can happen.
That's right.
So much can happen. I mean, people. I mean, let's take it one by one. Let's say if you do change your job, you change your job, you got a new job, and let's say it's a better job which is paying you more.
I don't think that's something that will come to you naturally to say I've changed jobs, so I'm going to change my life insurance.
No, it wouldn't. But you might not you might not change your life insurance, but you might want to look at your income protection.
That's right.
Because when you change your job, let's say you change your job and it's we're paying you maybe £50,000 a year.
Yes.
And then now your new job is paying 65,000. It means that your income that you need to protect would have changed, would have increased.
That's right.
So it means that you have to review your income protection, and it happens so often. I mean, when I do annual reviews with my clients, we do go through it. And when we go through, we realize that okay, the goalpost has moved. So it means that we've got to find something that's more appropriate for the client situation there and then. Okay, so when you get a new job, absolutely review it, review your protection, your income protection. In that case, that becomes more relevant, and even you can even review your critical illness, serious illness that comes with it. When you buy a house, whether a new house or an additional house, the income.
I love the additional house bit.
Or additional houses. Yeah, very important. But make sure you review it because the liability of the mortgage would make sure that you do have some sort of protection in place for yourself. And again, so and with it means that okay, maybe when you did it earlier on, you did it just with a mortgage protection, but now it becomes so important that you look at having an additional protection in there in the form of critical or serious illness cover and attach your mortgage cover.
That's right.
Okay, so when it comes to the review, it becomes very relevant. So when you buy a house or buy additional houses, by all means, do make sure that you do have that in place as well. And again, and whilst your houses as well, even if you are renting, right? Your landlord is responsible for the buildings and the buildings insurance and that comes with it. But how about your content? If you do have some valuable stuff in there, the landlord is not responsible for it. You are responsible for the content of the house that you're living in. So again, with the house, if you move house, if you're not even buying a house, when you move house, if you're renting, content insurance, you got to review it. So or even when, for example, your loved one has gifted you, inherited an important
beautiful pearl.
You just hit it right on the head. Why not protect it? Yeah, when you get married, please, it means that your lives would have changed. So again, not just you, it's not just you. It becomes your partner, it becomes the children. So now a policy for a policy for one now means that probably have to go for a joint cover or maybe two different covers for yourselves. And then again, kids going to university or planning for them, or again, you have to find the appropriate cover to become they become dependent. When they leave go to university doesn't mean that they stop depending on you.
It becomes even more expensive, I tell you.
It doesn't mean that you got to stop for the policy. It means that you got to review to ensure that you got the right amount of cover in place. And then finally, when you are approaching retirement, again, make sure that you do have the right policy in place, and most importantly, to protect your estate, becomes so relevant. Then.
Amazing. Thank you. To wrap up, we have had a deep dive into insurance. Here are the takeaways. Insurance protects you from big financial losses. So it's essential that you have the right type of coverage. Don't fall for the myths that you are too young or it's too costly. And always remember to review your insurance and also shop around for a budget-friendly ones. Fantastic. Now, Edem, I know that you talked about the financial pillars. If you are listening, we did a right deep dive into investing. So maybe you are thinking I can't pay for all of this protection. Go and watch this video, the next video, which is all about investing 101. You might be able to earn another way, income, to be able to pay for your protection. Or there's another video, which is budgeting.
Absolutely.
So that you can budget and factor in your payment for all your protection.
That's right.
Because it is essential for that financial wealth. Amazing. What's coming up next?
So what's next is pension and retirement planning. And it's just one of those grand topics that, especially whether you are in the UK, outside the UK, I mean, think about it this way. Your pension or retirement is the longest holiday that you ever will go on. But whilst you are on it, make sure you're being paid well. So we'll get right into that.
That's episode, which is episode 8. We are looking at pensions. Planning your retirement the smart way. Trust me, you wouldn't want to miss out on this. We would demystify pension and show you how you can secure that comfy retirement. If you have found this video really helpful, we'd like to remind you, please like it, subscribe, and share it with someone who might benefit from this. And always remember, build your foundation, believe in your potential, and become unstoppable. A reminder to watch our video on budgeting to help you pay for that protection, which is a foundation to your building your financial freedom.
Absolutely.
See you in the next video.